This week, Ben and I are going to discuss USDA's increase the expected ag trade deficit, along with some other export and import factors to be looking out for in the coming year. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how are you doing?
I'm doing well. How are you today, Will?
Doing all right. You know, the post Thanksgiving get back to work, kind of try and get back into the rhythm of things. Well, I say get back to work. I was on the farm over the past week back home in Missouri and redoing a nursery barn roof. So I had some fun, productive days on the farm for me.
Yeah, you were doing that back when we had all that wind, if I remember right. That
Yeah,
was
yeah.
a couple weeks back.
No, so it was yeah, it was a little windy, but all in all, not too bad. So can't complain
Okay,
too much.
cool.
No, no. Well, then going to give a quick rundown on prices. We didn't really have a lot of adjustment. It was pretty even keel across the board overall on the week. Given a update on the March corn contract, down 1 cent at 4.32. December 25 was flat at 4.32. January soybeans were flat at 9.85. November 25 soybeans down 5 cents at 10.05. That March soybean oil contract was slightly down on a cents per pound basis at 41.42. Soybean meal on the short ton for March down $8 at 287.90. That 2024 March wheat crop down 8 cents at 547. Cotton for March was slightly down at 71.49. Cotton for December was flat, and then that West Texas Intermediate crude oil contract down 82 cents a barrel at 68.10. So Ben, kind of a holiday trading lull a little bit.
Yeah, kind of as expected here. We had a shortened trading week, and a lot of people just kind of waiting to see how things materialized here to start the month of December. I will note that as we're recording this on Tuesday morning, most of our markets are up today because we did get some favorable demand news yesterday, at least on the soybean side. Very, very strong domestic soybean crush numbers. And I think that's helping lead the complex a little bit higher this morning.
Well, and soybean crush has been kind of a bright spot for the soybean market, and here in the recent weeks and months, really, kind of a buoy keeping it from going too much lower.
That's correct. It's been the it's been the thing that's really helped. It in a lot of ways it hasn't met or exceeded expectations, but it is certainly performing at a very, very strong level. And that's certainly helping. I will also say we haven't talked about soybean exports in a while. And in fact, the last time we did, soybean exports weren't in a very good place, and they've really recovered. We've pretty much reduced and removed all the deficit that we had in the soybean export picture. Kind of counter seasonally as well. We've seen some stronger sales and some stronger inspections here the last couple of weeks, and that's really helped get us back on track to reach our soybean export targets. The question is how long will that continue? And certainly there's a lot of speculation that this is just front loading ahead of a new administration in January, and so. But we've seen some strong sales and shipments here as of late in the soybean complex for soybean meal, soybean oil, all three across the board.
Yeah, and on that, talking about some trade issues and trade items, USDA, they've updated their expectations for the trade deficit for the 2025 year. It did increase from $42.5 billion to $45.5 billion. And a lot of that, is outside of the scope of maybe what we would consider, large scale production ag throughout the Midwest. So a lot of that deals with, fruits and other things and, different products like that. But on the what I would call the core Midwestern ag side, looking at things like soybeans, you're still seeing losses expected moving forward through the year. That's not really being fully offset by an increase in demand, maybe for livestock and other products. And Ben, I guess a lot of this is kind of centered around, uncertainty of how trade interactions could go as the new administration takes over. What's your kind of finger on the pulse here, looking at your expectations as we do change over into the new administration?
So I think my overall, impression of this is very much in line with what you started to say or what you were saying at the beginning of your intro there. There's a lot of things that impact these trade numbers, both from the products that are exported out of the United States and the imports that are coming into the United States, and a lot of products that um, are high valued in nature and really, I think, speak to the consumer buying power right now of U.S. consumers. We're just coming out of a holiday trading weekend, and numbers are looking very favorable, or at least economists and people are looking at this saying, "Hey, consumers are continuing to spend on holiday luxury goods," and I think that feeds somewhat into these trade numbers. People are still willing to spend on high priced imports into the United States, and that's driving that import number higher. And then, very similar to what you said, when we think about our core goods here in the Midwest, we certainly have a lot of corn, soybeans, and wheat that we could export, and we are exporting, albeit at lower prices, and so that lowers the value. But then you think of our higher valued cuts of meat, especially that come here from the Midwest on the beef cattle side, and we just don't have, we have fewer cattle available, or like we have heavier cattle. That's kind of one of the things, but it's one of those that we don't have a lot of excess meat to export to international destinations, and so that's helped lowering that export number on our side as well. So there's a lot of things that play into this. I always say that I follow the trade numbers, the ag trade numbers. They certainly are a big headline number, but at the end of the day, I think there's a lot of other stories that go into these that people often overlook.
Well, Ben, it's kind of a management of, what are we physically seeing, what is physically happening versus, maybe on the political side of what's being said and what might the intentions be moving forward. We've seen things like Jameson Greer now as looking to be Trump's pick for the U.S. Trade Representative position. And Greer's been a big advocate for tariffs and pushing that forward, in line with kind of Trump's policy ideas. So looking at that, you're trying to I guess weigh the expectation of what's going to happen versus what's currently happening and then project forward. So it kind of paints a foggy picture at times.
Yeah, sure. And I mean, let's look at Canada and Mexico. So the incoming administration has announced tariffs day one on Canada and Mexico to help curb the flow of immigration and illegal drugs. And in some ways, I think that is being used as a negotiation tool that we could see some deal made even before President-elect Trump takes office January 20th. And so, um, you know, it's not our policies that create the uncertainty, even though that's a big part of it. It's how other countries respond to it that is really the driver in terms of how these markets adjust and what happens with trade flows. So, um, eh, yes, our policies matter because that influences decisions of others. But as a reminder, it's how other people respond to us that is really quite uncertain at this point.
Yeah. Well, and Ben, looking elsewhere around the world and things that are also impacting the trade picture, Ukraine introduced a minimum on export prices for major ag goods. I haven't seen too much on that. I think that's a pretty new item there. So, time will tell to see how that really impacts the market. And I need to go back and figure out exactly what those minimums are and kind of what that threshold is. But you think that might add a little bit of price protection into the market on maybe not flooding the market with overly cheap ag goods, so you could see that as a positive maybe for the U.S. Competing on the global stage.
Yeah, so it does. Basically, it's an export ban below a certain price. And so this does put a little bit of a floor under the global markets, especially for feed grains like wheat. And so yeah, I do. I think that helps U.S. wheat producers a little bit. We've seen a lot of challenges out of that region, anyways. And so, in some ways, this is kind of like an extra protection, along with, frankly, they've they're dealing with some weather issues, but it's just, I think it's another protection in place for them, and I'm not sure it's going to play out a whole lot in the global marketplace because we haven't really seen um, these price levels be hit, but certainly another floor on the global marketplace for feed grains, especially wheat.
All right, Ben. Well, coming out of the holiday last week, what should farmers and ranchers really be paying attention to as we progress through this week?
Yeah, so it's we had kind of a quiet week with the holiday. This next couple weeks, or at least this next week, get a little bit more information. So um, this Friday, December 6th, we get the U.S. Employment and Wage Report for November. As a reminder, that October wage report and employment report was kind of a big shocker to the market. So it'll be interesting to see if that was a 1 month blip or if we've got a bigger trend happening in the U.S. economy. And then next Tuesday, December 10th, we get an update to the USDA supply and demand estimates. As a reminder, USDA does not adjust production in the December report. It is mostly the demand numbers, and specifically South America production and demand that we'll be interested in, but they do not adjust U.S. production during December. Usually kind of a quiet month.
So really what you're saying is you're just salivating and waiting for that January report.
Yeah, January is the big one.
All right. Well, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.